Hi, my name is Fan Yang, your Chief Technical Strategist here at fxtimes.com, presenting a video on the basics of the Ichimoku Kinko Hyo, a technical indicator system that helps us assess the markets and provides trading signals of different quality. Before we begin, I want to remind our viewers that information and opinions contained in this video are for educational purposes only and do not constitute trading recommendations. Forex trading involves a substantial risk of loss and may not be suitable for all investors. Here's a look at the Ichimoku Kinko Hyo on the dollar-yen daily chart. It's a Japanese charting method and technical analysis method. It's spelt a little differently or in various ways in the US, or you could call it the Ichimoku cloud. Okay. It was originated from a writer, a newspaper writer in Japan, by the pen name of Ichimoku Sanjin. His real name was Goichi Hosada, and this system was published, or this trading technique was published in 1969. Now the name tells a lot about the system, or at least it's a description of the system. Ichimoku means one look or a glance. Kinku is balance or equilibrium, and Hyo is chart or graph. So this translates to basically a glance at an equilibrium chart, and this attempts to identify probable direction of price and help the trader to determine the most suitable time to enter or exit the market by giving you the trend direction, support resistance, entry exit signals, and even the strength of these signals. Let's take a look at the components of the Ichimoku Kinko Hyo. So in this chart you see the red, blue, cyan, and these two lines that create the clouds. Starting with the red is called the Tenkan Sen, and the blue is called the Kijin Sen. Basically, the red one is also known as the conversion line, okay, and that is the highest high plus lowest low divided by 2 for the past 9 periods, basically meaning the moving average of the midpoints. Okay, the word Tenkan means to change. Here Kijin, which means standard, that's the 26 period moving average of the midpoints. And I believe it's supposed to use the exponential moving average. Okay, so those are basically your red and blue. Then you have this cyan color line here. That is price action pushed back 26 periods. So you see when you're here, the cyan line is representing your price action. Okay, so here the cyan color line, or the Chiku span, is here. Okay, so the word Chiku means late, lagging, or after the fact. Alright, and lastly, remember the clouds we saw. They are basically, there's two lines there. One is the midpoint of the Tenkan and Kijin, and one is the midpoint of high and low of 52 periods. So 52 period moving average of the midpoints. And then also the midpoint of the red and blue lines. Okay, and that creates a cloud, right? Senku in Japanese means forward, which is the opposite of Chiku, and basically this calculation is pushed forward 26 days. And you see here that these lines here calculated from your Tenkan and Kijin, as well as a 52 period midpoint, is plotted here. Here it is all together again, the Ichimoku Kinko Hyo. The red here is the Tenkan line, blue Kijin line, cyan line, which is the price action pushed back 26 periods, called the Chiku span. The Senko span A and B, A being Tenkan and Kijin midpoint pushed forward 26 periods, and your B being your 52 period of your midpoints, creating a cloud, or in Japanese, Kumo. Here are the basic interpretations of the Ichimoku chart. When the price is above the cloud, the trend is bullish. When the price is below the cloud, trend is bearish. When the price is in the middle of the cloud, the trend is ambiguous or ranging. Additionally, support and resistance levels can be predicted by the presence of the kumo, or clouds. The kumo can also be used to identify the prevailing trend of the market, as we mentioned before. When the market is above the cloud, it is bullish. When it's below, it is bearish. And when it is below, the cloud can be seen as resistance. And when it's above the cloud can be seen as support. Furthermore, the Ichimoku charting technique provides bullish and bearish signals of various strength. When the Tenkin crosses the Kijin from below, there is a bullish signal, and when the Tenkin crosses the Kijin from above, there is a bearish signal. And these signals, the strength of these signals are assessed based on these three factors. One, price relative to the cloud, Chiku span relative to the cloud, and crossover relative to the cloud. So let's take a look at that on the chart. Okay, so here, let's begin here. We have a crossover. Your red Tenkin crosses the blue Kijin line here. And first of all, the price action at that point is actually above the cloud. You can argue that during the crossover, the price action is actually inside the cloud. So it's pretty much weak to medium. Okay, I wrote weak here, but you could argue it's also medium. The Chiku span, which goes back, you have to look back to the left side of this chart. You don't see it, but take my word for it. It was below the cloud, and that means it's a strong bearish signal. The third factor, where the crossover occurred, is actually above the cloud, so it's a weak signal. So you have three different factors telling you sort of a mixed signal here. Therefore, the signal is weak to medium, or you could argue it's medium. Okay. Here you have another crossover. It's a bullish crossover with your Tenkin crossing the Kijin from below to above. So that's a bullish crossover. Now that price action at the moment is below the cloud. Chiku 26 periods ago, you would have seen that it was below the cloud, and the crossover is also below the cloud. So that's a very weak. Okay, crossover here. It was also below the cloud, so that's a very weak signal. Here you had this crossover to the downside, so that's a bearish crossover, and this is pretty much very close to this crossover, so you know all the factors are the same. They're all below the cloud. So as a bearish signal here, it's actually a very strong signal. So it provided a very weak bullish signal and a very strong bearish signal. But just think about that in terms of taking away the Ichimoku. That basically means we have this sharp price drop, and you have a rally going against the trend. Just that fact itself should give you a warning that this might not be a strong trend until it at least breaks some kind of pivot. Okay, and the Ichimoku also tells you that based on mean price action, based on moving averages of your midpoints, that the market is still bearish. So look for bearish signals, don't look for bullish signals, basically. Okay, so now moving on a little further, down here you had a bearish signal, price action within the cloud, Chiku span within the cloud, crossover within the cloud, and that's a medium signal. Okay, the market is ranging. If you're gonna do a ranging and a medium strength bearish signal, that means you should be very agile in getting out, because the market is ranging and it's not bearish. You see here we had some support here, so maybe you should think about getting out near that support if you go on this bearish signal. And just filling in the gaps here, a couple other crossovers. Here is a bearish crossover. price action, you could argue, is within the cloud, so that's a medium to weak factor. Chiku span is also within the cloud, so that's medium, and the crossover is above the cloud, so that makes it weak. So basically, this is a weak to medium bearish signal. The market actually did come all the way down to this low here. See, there was danger of respect to these highs. We had this push, this is pretty much crossing over to the other side of the cloud. So that represents the market being, when it crosses back and forth like this, it reflects an ambiguous or ranging market. Okay, so this wasn't a very strong signal. Here we have a bullish signal. Okay, the price action and the crossover both below the cloud. The Chiku was below the cloud, so this is a weak bullish signal. Okay, the market came back up using this cloud at the moment as a resistance. Alright, and I'll leave you with that. Remember, these are the basics of a trend following system using different manipulations of the moving average calculation. In general, moving average based systems will not do well in choppy markets, so make sure to implement other trading and risk management techniques in using the Ichimoku Kinko Hyo or any specific trading system for that matter.